Welcome to TradeTheMBI.com. This is John. This report is for the 10th, and well, there it is. The sell signal that continued. We had the potential move break, but what happened is as it got to the red DOC, the short-term buyers, mid-term buyers in the green here, faded a bit more, as did steel moving below. And that little spider typically is what we look for short activity. And sure enough, we started out with a nice pump in the day and got us all the way back up to the ABM yellow, but intraday started to fade pretty quick. If we look at our 5K chart, we can see it. I have to actually scroll back just a fraction because the day started over here. We had a nice little short, came down right at the target, and then turned around off of secondary move off the A. Was not good enough. It was the first close above, and you could have actually taken that one. Just would have been a matter of the stop. And typically, I'm in the 6 to 8 point range. Most people find that a little too much, but you got to leave a little breathing room when it comes to some of these. This was kind of an awkward place to have it. We were sort of caught in between. Didn't have the reset of the steel, and even when the rally started, it wasn't until it actually began thoroughly, right around that 2050 range, that things really took off. But then we got this beautiful short right up here at the 65 range. There was a secondary one at 64, but you can see the shakeout immediately turned, but the secondary one, no such situation. It started actually up here a little bit, but then confirmed itself when the final breakdown took place, and that was significant because it was a breakdown, and it was beautiful. So we got contract rollover coming, which is going to tweak the futures versus what the regular closes are, and that's the December 15th contract. So we're going to be moving into the March 2016 contract for futures at least. But as for a retested lows, not shocking. We talked about that from the 50K standpoint as well. And we were looking to head back towards these dips below the red line right here for the ES at least. That was going to be in the 1990 range. Ways to go. I mean, this is still holiday light. All we've done is kept pretty much the same range. We had the potential for a move that could really have given a nice buy from this configuration, but the fact that midterm buyers, even from the NQ standpoint, broke down now. In that case, we would expect a much deeper decline. If you don't get it and you get the extreme oversold, then we could see a pretty sharp rebound on this. So we're going to be prepared for both situations. And interesting de facto midterm buyer cross over the red, even though the red is declining. It's usually not the most promising, but they happen. In fact, let's put those green ABM values because that would be your turnaround point, 17, 16, 18 on the Dow. Definitely want to be aware of all those. And again, bonds, again, there's still going to be debate now. There's almost unanimity of a rate hike kind of situation, which I always love because whenever everyone's in agreement, they're usually wrong. USO would be interesting because we're seeing quite a dramatic pressure in the euro, so there's some money that's really believing that that hike's going to happen. So this could be, after years and years of false alarms, the final one that does it. But it still doesn't make much sense if it were to happen. This particular point, USO though, continuing to struggle. That lowers that intro all the way back down to 1207. It's poised for a turnaround. Short-term buyers across, but you needed to have at least today has to be midterm buyers jumping in there to kind of give it a support ceiling. Otherwise, it's still going to continue to drift lower. And GLD, nice rise in the shakeout, breaking into the new zone. You would expect that to turn around. Again, you would expect this to be exploding if there was going to be a rate hike. So there's still some indifference in the euro back in our zone, which I don't consider to be. I mean, this dip outside the zone was an aberration in my view, but needless to say, right back at the edge of it. Still have some positive extremes to retrace, even this last move just yesterday, which would take us all the way back to the 1087 range. So we'll keep an eye on that one. That's a sort of an interesting play in between all of this. Apple should have had a start of a turnaround on there, but immediately, as the green midterm buyers are getting close there, boom, you had a failure of the short-term buyers right after the beginning of this. And like I said, that was the point. When you have the A, look for that dip, turn around, you'd have to get back above that previous close. Not quite getting there. Some of the others that dramatically made moves are going to struggle a little bit too. Amazon still holding up nicely though. Baidu, strong DOC spread there right as the steel was coming across. We had that 206 below that point. Definitely want to be out. That becomes the pivot at this particular point. And again, it was the FAS that was always going to be our leader, so without the FAS, we're not going to get much of anything. And the FAS really tells me that, again, there's a mixed feeling on this rate hike situation because the FAS should be taking off. They think their rates are going to be going up even slightly. There's the double concern of, impact for economic growth, but that's a whole different issue. There is no real growth, and yes, I know there's 5% unemployment, which means everyone has a job, so it shouldn't matter if there's, slowdown. Facebook, right at the edge. Still bearish in general from there. The fact that the steel hasn't reset at all is not horrible, but you needed to see more shorts activated in this for it to really break down past this range. Most of these positive extremes have been filled, even going all the way back to here. So none of that's a requirement. Just a standard weakness off of some of the fluff that's been going on, and that's the holidays. You're going to get the broader volatility. I keep telling everyone that to expect it. People think, oh, we got a 10-point move to the upside. It's a breakout. No, it's just a crossover move. Netflix, again, it's also headed to positive extremes. We expect that to fade a little bit more. The fact that the red is starting to break down into a new zone, you've got to reset it to steel and everything, so I don't expect it to be too dramatic. Obviously, that assumes we're not going to have a major market meltdown. PCLN, right on. Putting in at number 3, which means that it should start to fade a little bit more here. It had a nice rise, but sort of soften there. Could get a reset in here, but you need to see the steel dip below the cyan to really activate that move. And the modest decline in SPY. Putting in at number 2 right there. But again, off of a declining red, sort of a de facto, it's not really an active strong move, but certainly going to be an excellent value to play out. Start at the high there for a turnaround, lower it down if you break the lows. We take the close of the previous SPY there. Tesla, still poised in its weakness, getting right back down to the original support numbers. Does have a little bit more room potentially. You did have the open on this one below it, but it closed above. So the potential for retracing all the way to that is still viable option. The fact that it's positive shakeout, though, I think that you still have some more strength and compared to something like Twitter, well below. Big difference between those two from a indicator reading standpoint, simply because the shakeout here much worse in the sense that you've got significant distribution where you don't see that in Tesla, so weakness in price there. Still has support, which is an interesting one because I can look at two stocks that are about to break down. One will look like it has support because the shakeout's positive, whereas something like this clearly shows you that no, there's been broader distribution going on in that overall configuration. But back on the 5K, it's going to be a little disruption with the way the futures read a little bit, but that's where the ES symbol kind of evens that out. So that will mitigate some of that, but I would expect that we're probably going to continue a little bit lower to test out some of the supply and see where it's at. So I think we'll get a little bouncing action again. Pretty much the same. You could have 10-15 point ranges in minutes because of the lower liquidity as the holiday ramp up starts, and then particularly if we're going to get plays. And this was sort of a squeeze out. There really wasn't as much inflow money buying as might have otherwise thought from the 5th, and that was lifting price. Didn't last very long. So that's the long and the short of it. As always, though, I'll be on the Skype chat posting the charts and that. Trade well.